asset class returns in April. So after the madness of March, it was a relatively acquiescent April. Outside of the exception of crude oil, is basically onwards and upwards for risk assets. And if you can look across the table there, see at the bottom there was commodities, and even within commodities it was quite mixed. And I guess some people will probably be surprised to see, how small the decline was there actually. In terms of the top of the table, it was almost the flip side there. MLPs basically got a hammering in the previous month. You can see the year on year still very much down year over year. Meanwhile, US large caps, basically S&P 500 was the head of the table otherwise, and really just about everything actually positive month over month. I mean, if we sort of think about the highlights of the month, S&P up about 12.7% on the month, and really only two minor drawdowns of circa 5%. The VIX had a high of 60.59 close to the start of the month, drifted down to a low of 30.5. That's low in these days, I guess you could say. The US 10-year Treasury yield traded very tight range, started the month or closed March at 0.67 and then closed April at 0.62, so a little tiny bit of duration kick to returns there. US dollar index also trading very tight range, barely able to breach 101 on the top side or 98 on the bottom side. Pretty clear tension there between that safe haven bid and on the one hand, and voluminous Fed easing on the other hand, and similar for gold actually. Although gold did do a bit better than the US dollar. Gold traded up as high as 12% at one point to a high of 1788, and then only close a month, only up 6.1% to close at 1694. Again, it's that sort of safe haven bid versus stimulus sort of risk on price action. And then of course crude oil, well, we all know what happened there. It went down to negative 40, broke the lower bound of what most thought was possible. In terms of what was kind of driving that action during the month, really the stimulus was the key factor there, really. And I've been talking about that sort of, kind of, I don't want to say tongue in cheek, but it's basically reality what it is. It's stimulus versus social distancing. Massive, continuous, globally coordinated monetary policy announcements backed up with fiscal policy measures. Whether you want to call it economic life support, this is just really putting a floor under investor sentiment. In terms of data, I mean, data, we can talk about what came out and how shocking the news was, but really the economic data is not going to be useful anytime soon. I mean, those massive drops that we're seeing, it's fun to show charts of those and get headlines, but they really serve no useful purpose when it comes to making medium-term investment decisions. Geopolitics was relatively quiet. A few rumours about North Korea, but as yet unconfirmed. Concerningly, though, there's that chatter around US retaliation on China, with regards to how they've handled the virus. That's quite a thorny issue, but it also sort of dashes that tentative progress that had been made on the relations there. There was that trade truce late last year. You remember the trade war. So that's probably a concern. But going forward, again, that wall of stimulus valuations are still decent. They've come up a bit, and sentiment, I would say, still for the most part is quite bearish. So those are the kind of conditions that help things over the medium term. As for what happens next month, well, with the way that this year has gone, this month is anyone's guess.